All eyes will be on the Reserve Bank later today as it makes a call on interest rates. Most economists predict relief is on the way for borrowers, with the official cash rate expected to fall below 4% for the first time in almost 2 years. So the only real question is, by how much? Let's find out. We're joined by Australia's top forecaster and HSBC chief economist, Paul Bloxham. Morning to you.
Morning.
How much?
Well, we think they'll go by 25 basis points. That was the same move that they gave, well, the same size move they gave back in February, and we think the cash rate therefore will be cut to 3.85%. So, that's good news for borrowers, that the cash rate's gradually coming down. We don't think there's much chance. In fact, the market isn't pricing much chance either that they do anything larger than that. Sort of a month ago, when the trade shock from the global economy was playing out, there was some talk about that, although it seemed, even to us, a bit unlikely even at that stage. I think the RBA will take sort of incremental steps in terms of cutting its cash rate.
A 1/4%, even though NAB is saying 0.5%.
Well, there's lots of debate. There always is around RBA meetings, but we think that it's much more likely they'll give us a sort of normal increment of an interest rate cut this time around.
OK, and then what does that do to the economy?
Well, it should provide a bit of support for the consumer. The consumer numbers have looked a little softer, a little weaker in the past couple of months. And so this will give back a little bit of income to households, and that should provide a little bit of support for growth in the economy. So in general, that's what they're doing it for. They're lowering interest rates to get the economy to grow a little bit faster.
Will it push up housing prices?
I think it will contribute. I think we even saw some evidence that the rate cut we got back in February delivered a bit of support for the housing market. If you remember, house prices were really easing. In some cities, they were starting to fall, and they've started to stabilise, if not lift a bit. So I think this additional cut that we get this afternoon will provide a bit more support. We think the housing prices nationally will be in a modest upswing through this year.
OK, so what if you are living off your savings? Because a lot of Australians are, and you're seeing interest rates go down.
Well, that's the other side of this story, but the story would still be that interest rates are a lot higher than they were through the pandemic, and even prior to. We had interest rates that were lower back then. They've gone up. They're a bit more elevated, and yes, they're coming down a little bit. We think they get a cut today, but for those households, they need to look at how they're set up in terms of dealing with interest rates starting to come down a bit.
OK, so this one, and then what for the rest of the year? Because this is not going to be in isolation, is it? Well,
we don't think so. We think that we're going to get a couple more cuts this year from the RBA, but we think they're going to be spread out. So we don't think they're all going to arrive, at the next meeting and then the one sequentially. We think it'll take a little bit of time. So the RBA, I think, is going to be quite cautious. But I think the RBA today, this afternoon, is going to give us very, very little guidance about what comes next, because they're looking out in the world into the global economy and seeing what's going on and saying, well, there's a lot of volatility. All this trade policy change that's going on almost on a daily basis really creates uncertainty and makes it hard for the RBA to know what their pathway might be from here. So we think they'll cut a couple of times, 2 more times this year, but I think the RBA will be pretty circumspect about giving much guidance about the future.
OK, Paul, thanks for your update.